Welcome to TradeTheNBI.com. This is John's reports for the 26th, and of course we've got the big holiday Memorial weekend coming up, and market pushed up here with a new high, but we can see we got positive extremes and still in the yellow, but that cyan moving below red there is going to give it a little bit of staying power. That doesn't mean that we're not going to get a little softness. It just doesn't look like we're going to fade. Where it becomes problematic is if we get the turnaround of that cyan pretty immediately, and now you've reached a point where every time we get down into that -7 range, you're likely to get either a consolidation or the return of a little bit of fade action. We've had strong movement though from midterm and short-term buyers pressing this forward, but again, I always get concerned when I don't see the red breaking above that zero line. It just indicates that more speculation than it is really continuation long-term push, and that's often what happens when you break out to a new high. You tend to fill it back. The encouraging part though is that shakeout continue to rise pretty close to being able to match the previous push there. Likewise situation on the NASDAQ, but again, I mean, look at this. This is a pretty deep move of shorts just not being. It makes it much tougher for the market to rise significantly, simply because you don't have that short cover impetus that really pushes things. It often requires after hours trade to kind of elevate things. Euro has sustained itself within that high. We kind of expected that here with the readings. We do see though that short interest is creeping up along with the orange staying elevated there. If we get a rise in the steel and that breaks above, then you might see a little bit more of a drawback to fill in some of those positive extremes, but for now, holding up just fine right within the middle of our range up to the 114 area. And bonds just trading sideways now until something breaks. I think that's what they're all looking for. Speaking of breaking, now we talked about this, that when we got this signal, we didn't expect this rally to last, and lo and behold, you know, there's just no way to counter this supply thing. So you're going to get these, I don't even want to call it a false pump because there's nothing wrong with it. It's just, you know, there's a bunch of talk, but at the end of the day, unless you have significant economic growth, the supply that exists currently is just too great to sustain price in general. It's kind of a tough dynamic at this particular point. Obviously you have production costs, but with the amount of surplus that exists, really an interesting one. This is going to be the telltale sign of real economic growth, because if we start to see significant drawdowns in inventories, then you know that the economy is actually heating up in a significant way that would, should propel the market, at least move that the S&P towards that 3,000 level, which I know is shocking to some people, but not to us. We've been talking about, Dow 20K and then potentially up to 30K for quite some time. This is the way it's been. And this is, there have been plenty of books written on this. The peace dividend was built into it. Once the Iraq war is finished, it usually takes a few years, and you get significant market increases after it. It's just a historical reality. Gold, from its standpoint, frozen right now. It's still going to break higher, no question about that. I don't think. For a 5K standpoint, I'm going to shrink that chart a little bit. This was the buys from the other day that we saw build up from a consolidation, broke out in the after hours, solidified. I mentioned that once this retraced, it would come right back up to the highs, and sure enough, it took the highs out and pretty much stayed right even with that pre-market, which is right in here. So it was very convenient, almost, idyllic as far as an easy trade goes. All the pre-samples buys came in. This is, though, a difficult one because you have to be patient. You have to just wait it out, and then it makes its move. And I'm never afraid to take my gains when I get those significant pops above 13, particularly if it's right here when you have the pop above the 13 plus you have the DOC spread. Otherwise, when you have the cyan under the red, you don't tend to get the decay factor, and that's kind of what we're seeing on the daily. So everything was sort of in line for exactly what we've been seeing. It still doesn't look to be excessively weak with that cyan on the daily. So it's just a matter of going with what is. I think we're going to see a little bit of softness. Most of those things are going to be bought up, and we're just going to keep plugging away, and I think everyone's just waiting to see if there's any movement on the domestic agenda, and that is going to be a little bit more difficult road ahead, because without any kind of movement, it really makes it difficult to see how you're going to get an impetus towards jumpstarting the economic machine. I mean, things have improved, and there's no question about that, but that's modest, and it's not going to generate 3+% growth. So there's some headwinds that exist, but there always are, and there's always reasons why the market shouldn't do something. But with the massive amount of liquidity that's available, and as we've talked about, there's no other place to get yield. So the market has been the only place for that, and that's why it's moving where it is. And until that changes, worrying about multiples, things like that, not necessary at this time. So we just go with the readings. As always, trade well.